Good morning to all of you. I have a great pleasure in welcoming you all to the weekly Saturday knowledge sharing webinar, which is organized by Mehta. As you are aware, today we are actually taking a insight of Stakeholder Relationship Committee, Nomination and Remuneration Committee, and the Risk Management Committee. And the presenter today is going to be Afliya Sapatwala, who's a partner of Mehta. And we have a panelist today, Swapnita Vikas Yadav. As you are all aware, Swapnita, the name itself stands. Swapna means actually dream. I can say actually dream is nothing but it is a vision actually. Everybody is working with the vision. She is actually coming the vision. She is having a versatile experience in accounting and as well as secretarial. In fact, she is holding a membership in our cost and management accountancy and as well as the company secretaries of India. And currently, she has been actually working with the Shipping Corporation of India, which is one of the Navaratna companies of India's top 500 companies listed in BSE and as well as NSE. She is currently a compliance officer and also a company secretary under her role actually. And in fact, she had headed this division earlier to in addition to that, I think she is also holding their subsidiary companies. Two of the subsidiary companies is holding it. And as you are aware, the shipping corporation being a public sector undertaking, I do not know how many of you are aware, it is very difficult to work in a public sector undertaking because there are too many bosses in the public sector undertaking. There is a concerned ministry, there's a comptroller and auditor general of India, and there is a reporting ministry, and plus there is a inside people. And again, the people who are actually appointed, they are all typically a bureaucrat, which are actually under the direction of the government. So many if and buts which are actually working there. And not only that, they also have the separate code of corporate governance formulated by the government of India, which they are actually bound to follow. With all those things, she has been excellently doing in her role actually. In fact, I should like to congratulate her for her versatile role, or heading the finance function earlier, now moving to the company secretary function. It is really, very creditable things to her actually. I think with her varied experience in the public sector undertaking, and we will hear the version, what are the things, etc., with her experience. And no doubt this subject calls for really a better understanding of this committee functioning. As you are aware, the Nomination and Remuneration Committee very recently, LODR, raises the bar of the responsibilities of the Nomination and Remuneration Committee in terms of skill matrix, analysis, recruitment, succession planning, etc., and other thing and all for the listed companies. That is one thing. And again, the second thing is there, risk management committee, how important you are all aware, because every business which is running on the risks need to be addressed. There should be a risk management, risk mitigation, etc., and other thing and all which are as going to be there. It is going to be definitely an interesting topic. No doubt, company secretaries got a lot of role on this play as usual, because we have to educate the director, we have to tell them what is the thing, we have to tell them what is the compliance requirement, all those things there. If non-compliance there, again, how to sort out, that is again yet another problem. With all those things, I think I'll ask our panelists to share her thoughts on the topic before we proceed. Over to Swapnita, please.
Thank you so much for the lovely introduction, sir. I think you have not left anything for me to add into my profile. So, without wasting much of time, I think we should immediately touch upon the today's topic. That is information about the Nomination and Remuneration Committee, Stakeholder Relationship Committee, Risk Management Committee, its importance in any company. So, sir, in today's dynamic corporate environment, you will agree with me that the effective governance hinges mainly on the strength of its board committees. And this nomination, remuneration, stakeholder relationship, risk management committee plays a very vital, pivotal role to ensure that the governance in any of these companies. So if we have to go one by one, I would first like to touch upon the Nomination and Remuneration Committee. The Nomination and Remuneration Committee ensures that the company is led by a very competent individuals by overseeing the appointment, evaluation of directors, the senior management. It also designs a very fair and a performance-linked remuneration policies, aligning leadership incentives with a very long-term shareholders' value, ethical standards. Similarly, in case of the Stakeholder Relationship Committee, or what we call as a SRC in a listed company, the SRC safeguards the interest of all the stakeholders. As far as the companies are concerned, the majority of these stakeholders are nothing but the shareholders. It addresses the grievances, ensures transparent communication, strengthen trust between the company and its investors. And this is very crucial for maintaining the company's reputation and that of the shareholders' confidence as well. And about the risk management committee, I would say it is responsible for identifying, assessing, mitigating the key risks that could impact the business, the company. In an increasingly volatile world, this committee ensures that the company is resilient, compliant, well prepared to face the strategic, operational, financial, and reputational risks. So, at the end of it, if I have to summarize it in a gist, then I would say that these committees uphold the principles of transparency, accountability, and sustainability, forming the backbone of the robust corporate governance.
Thank you very much. As you rightly say, the Stakeholders Relationship Committee is one of the committee which actually takes care of the entire stakeholders, more so with the shareholders, a mechanism put in place for reaching the communication, reaching the documents in time, and ensuring that timely actions are taken, especially the corporate actions. When you are talking either financial, non-financial, whatever it is, the actions taken, overseeing the services offered by the company, by the R&D agents are done timely, adequately, without anything. And above all, in anything happens, and again resolving the complaints as expeditious as possibly. That is the thing. Because you ensure what you call the shareholders right in a way. That is the importance of this particular committee. Over to Aflia, please. Over to Aflia, please.
Good morning. Good morning to all my professional colleagues. This is Alicia Sapatwala, partner at Meta and Meta Company Secretary. I welcome you all to yet another session, interesting session of deliberation on the importance of committees which a company is required to form. So today's topic is an insight into Stakeholders Relationship Committee, Nomination and Remuneration Committee, and Risk Management Committee. As you are already aware, we have deliberated on an important topic of audit committee in one of Saturday webinars. Today we move forward with that. So we touch upon the Stakeholders Relationship Committee. As everyone is aware, its SRC, Stakeholders Relationship Committee, plays an important role in ensuring transparency and accountability of the company with its shareholders. They are a crucial link between the company and its shareholders and ensures that the safety of the stakeholders and addresses any of their concerns. Today, given the increasing number of grievances from the shareholders and the importance of good corporate governance, regulatory authorities such as Ministry of Corporate Affairs and Securities and Exchange Board of India have laid down detailed provisions which govern the formation, composition, role, and responsibilities of SR. So we begin with Section 178(5) of the provision under the Companies Act 2013, which specifies the applicability of SR. So every company which has more than 1,000 shareholders is required to form SRC during a financial year. The composition for this committee shall consist of a chairperson who shall be a non-executive director on the board of the company and such other members as may be decided by the board. The functions that have been laid down under the Companies Act are to consider and resolve the grievances of the security holders of the company, including complaints related to transfer of shares, transmission of shares, non-receipt of dividend, non-receipt of balance sheet or annual report, and non-receipt of declared dividend. SRC is required to be formed by all listed entities. Further, the composition requirements consist of at least 3 directors, of whom 1 director shall be an independent director. Another important condition laid down is the chairperson of such a committee shall be a non-executive director. Further, Regulation 20 of SRC, SEBI LODR regulation lays down the role of SRC in detail. So Part D of Schedule 2 provides that resolving grievances of the security holders of the listed entity, including complaints related to transfer or transmission of shares, non-receipt of annual reports, non-receipt of dividends, issue of duplicate or new share certificates, general meetings, etc., are being resolved by SRC. One of the important measures that SRC is required to take is the effective exercise of voting rights by the shareholder. Further, it also reviews the adherence to the service standards adopted by the listed entity in respect of various services that is being rendered by registrar and share transfer agents. It is the responsibility of the SRC to deliberate with the RTAs for any grievances that a shareholder may have. Further, it also reviews the measures and initiatives taken over by the listed entity for reducing the quantum of unclaimed dividends, ensuring timely payment of the dividends, annual reports submission, statutory notices by the shareholders of the company. It also resolves grievances of the debenture holders related to creation of charge, payment of interest, principal, maintenance of security cover, and other covenants. SRC is required to meet at least once in a year. So this is the statutory requirement, but as and when required, the committee may hold more meetings to ensure that the grievances of the shareholders are timely resolved. The powers and duties of the SRC, which have been laid down, are to investigate any activity which is within the purview of its terms of reference. It has also the power to seek any further information that it may require from any of the employee of the company. It can also obtain legal or professional advice from external sources for quick resolution of the investor grievances. It can secure the attendance of the outsiders with relevant expertise if it is considered necessary. Further, it also oversees the performance of registrar and share transfer agents. It may also recommend measures to enhance shareholders' satisfaction. Some of the circumstances where SRC is required to take the decision are as follows. So, the primary function being the redressal of stakeholder grievances. There are few other circumstances under which SRC is required to act. So, it is required to approve the transfer or transmission of shares, especially in case of dispute or if legal documentation is incomplete or challenged. It also approves the issuance of duplicate share certificates after the necessary recommendations have been made to it by the RTA. It approves the deletion of names in the joint holding where one of the joint holder passes away and the same needs to be removed. It also monitors and approves grievance redressal measures, including steps taken by RTA and company committee. So this is an important function of SRC, where the regular monitoring of the grievance redressal measures or the system which is in place by the company is required to be taken. Approval of standard operating procedures for handling the complaints, for interacting with RTAs, and also for shareholding communication. So in today's digital world, SRC still plays an important role in resolving shareholders' grievances.
Aflia, I got one small question to ask you on this. When you say SRC is actually effectively on resolving the grievance mechanism, let us say in one of the companies, I've been holding a share and I given a requirement to transfer the dividend to a particular account. Somehow there I closed down that account. I have not intimated that account subsequently. Then I discovered this after about 2 or 3 years. And when I take up the matter with the company secretary, he says, no, it is going to this particular account. Then I told him this account is actually closed down. This is what it is there and other things and all this thing we need to do. Somehow that I'm not getting a good response from the company secretary, matter is not getting resolved. He is actually directed to pillar to put, take up the matter with the bank, take up this sort of things are all happening. In such a case, is it possible that I can directly approach the chairman of the stakeholders grievance committee and get the matter resolved? What do you think?
Yes, definitely. Even SEBI has got its own mechanism where the shareholders can post their grievances, the court portal where the shareholders can post their grievances, and the SRC, the chairman of the SRC, is required to address the complaints which have been shared by the shareholders in their meeting. So there is a proper system to be in place by the company where all these grievances are resolved.
No, but how do you approach the SRC chairman? Because what happens, the company has got the whistleblower policy. They given the details of only the managing director and the audit committee chairman and the board committee chairman. But there is no SRC committee chairman details are available. So how do I go, you think?
So we need to, the details of the SRC committee are on the website of the company, the people who are the members. So
Okay,
obviously you can directly connect with them.
okay. So we can approach the SRC committee directly in cases of things that can be done.
Yes.
Okay, thank
The
you.
committee is required to take the matter up in their meeting and discuss whatever grievances the shareholders have.
Even
Okay,
we are
okay.
filing the corporate governance report on quarterly basis, sir. There also the details of the chairman of every committees are available. So that is also one of the option.
Yeah, that is there. One thing is there, we can always approach the SEBI for the complaint. That complaint mechanism is definitely there.
Correct,
Yes.
correct.
Thank you. Yeah, go ahead.
Again, another duty of the SRC is to periodically review any pending investor complaint. So any complaint received from the investor has to be solved within a minimum period of time. If it is prolonging for a period beyond 21 days or beyond a particular standard time, then the same have to be escalated, resolved, or the shareholders need to be communicated of any difficulties which are being faced. Authorization to the directors is also given by the company to represent itself before SEBI, MCA, or any other regulator on the shareholders' issue. Further, the formats are required to be approved by the SRC committee for a proper reporting of any grievances that a shareholder may have. All these data should be disclosed in the board's report or through public disclosure. Any special situation where the grievances are there have to be handled properly by the SRC. So in cases of merger or demerger, the shareholders need to be communicated and it is the responsibility of the SRC. So Swapnita, you must have handled the demerger in your company. So how were the shareholders approached? How they were taken into confidence in the team?
No, nowadays the SEBI has laid down a very prescribed procedures with regard to this shareholders complaint. Like there is a score portal, they can lodge their complaint in a score portal. Then we have to respond to them within the prescribed timeline. So there are the very much, systems in place. So we are not finding it very difficult when it comes to their complaints. There is a very systematic approach to address, to resolve those.
So even in case of merger or demerger, where there may be a number of complaints, the same are resolved within a prescribed timeline, right?
Correct.
Okay.
Correct, but built under Section 230 to 232 of the Companies Act, which comes under the purview of the Ministry of Corporate Affairs. So that complaints were routed through MCA, not under the SRC platform.
Further, it is one of the duty of the SRC to recommend policies and programs for better engagement of the shareholder. As we have already discussed, the SRC is focused on investor and shareholder grievances. It also needs to coordinate with other committees of a company. So it needs to coordinate with audit committee for matters involving financial misconduct or representation. Further, NRC, it needs to communicate for any director-related complaints. If a shareholder has concerns relating to CSR initiatives, then the SRC needs to coordinate with CSR committee for proper redressal of their grievances. Further, non-compliance with relation to provisions of SRC composition and formation have been prescribed both under the SEBI LODR regulations and under Section 440 of the Companies Act 2013.
In fact, when you talk about the penalty provisions, etc., in fact, when the company, especially when the private company become a public company, then the threshold limit is actually changed. The company secretary has to keep a watch so that the necessary committee, because what happens is even when unlisted public company, there will be audit committee. But the thing is, independent director requirement may not be there. But the moment you cross the threshold limit, independent director requirement is there. The moment you cross, you say audit committee requirement, audit committee is there. But the thing is, in the absence of the independent director, the constitutional audit committee itself is actually invalid. It is as good as non-existence of the audit committee.
Correct, sir. They levy separate penalty even if your committee is not as per the SEBI LODR provision. So constitution, quorum, everything is equally important.
Yeah. So naturally, it is not only the composition, there's also a right composition with the right people. That has to be ensured. That is one thing.
Correct.
So that has to be taken care of. And not only that, again, if the minimum number of the independent director falls below, then again that filling up and other things and all those requirements also has to be fulfilled. Really speaking, a company secretary has got a lot many responsibilities in monitoring these aspects in the company on regular basis. In fact, I came across one of the leading company in southern part very recently, I think about 6 or 7 months back. It was one of the best and Crompton companies, project management company, which has actually caused the threshold limit of the loans and advances, etc. By virtue of this, it was actually required to form various committees and also supposed to get the secretarial audit report. But none of them, they are done for 5 years, they slept over it. There's a heavy penalty. I think you will not be believing the penalty ran over more than 1 crore they have levied actually in the ROC of Chennai very recently. So these sort of the things are happening it, because when we talk about the non-compliance, etc., the compliances, it is not running one time, it is running for year-to-year basis. Every year there is a non-compliance, every year there is a penalty. That means the audit committee, non-constitution, secretarial auditor, non-submitted 1 year, 2 year, 3 year, 4 year, it keeps multiplying. So one has to be very, very careful. Nowadays, SEBI also very much concerned about all these things, because there have been a lot of decided case laws are there on SEBI, which is directly coming as LODR, non-induction of independent director, non-supervision audit report, secretary report, all those things which are also there. One has to be very careful on this when it comes to the non-compliance. Yeah. Go ahead, Afriya.
Yes, and again, the SEBI has standard operating procedures where the penalties are levied per day of non-compliance. So that multiplies into a big amount. So here we have listed out some of the best practices for effective functioning of the SRC committee. It needs to maintain a proper complaint register which can digitally track all the complaints that are lodged by the shareholders. Further, a standard operating procedure may be documented for dealing with common complaints. Time-bound resolutions need to be made for redressal of the shareholder grievances. A proper coordination with the RTA of the company needs to be established. And also a regular reporting include grievance redressal metrics in the board meeting.
In fact, one of the things which I used to do as a company secretary, every meeting, the share acquisition, because those, what do you call that, takeover, hostile takeover was actually happening. If suddenly some share movement is there, who's acquiring share, what are the things, credential, we have put a mechanism. I used to get the regular report from the R&T agents. Oh, I know to give to the board, so the committee regularly, who are the people who are acquiring share, whose shares are going up, who are the people connected with that, and all those sort of things. So as really you said, the company secretary responsibility is really very high on these things and monitoring and keeping the board informed. Unless the board and committee are informed by the company secretary, they will not be able to take any decision and monitor things. That is very important. Yeah.
So here we have listed out a small gist of the SRC. So the purpose of the SRC is to assist the board in the redressal of the grievances of the security holders. It covers complaints related to issues of the security.
I think we have lost her network.
Yeah, I think there is some problem. Even the video is not moving. Disha, can you check up?
She should relog in.
I think she is relogging. Yes, Aflia.
There was some issue with my internet.
No problem, no problem. We can understand. These are all beyond our control. Yeah.
Yes. So I hope the presentation is visible, right?
Yeah, visible very much.
Yeah,
We can see your conclusion part of this committee. Yeah.
Yes. So I was just mentioning regarding the stringent regulatory expectations both under the Companies Act and SEBI LODR from an SRC committee. So it is very essential for a company to establish robust processes, maintain timely communication, and ensure transparency in the grievance redressal of the shareholders. Such measures will foster trust and strengthen corporate governance, ensuring a long-term sustainability and reputation of the company. We move on to the next committee, which is Nomination and Remuneration Committee. So this is
somebody has actually put up a question. How does the company deal with the hostile takeover? Yeah, Sopranita, any thought on this?
No.
How the company deals with the hostile takeover?
No, sir, I have not handled this hostile takeover. I only know the gist of the provisions of the Companies Act, but practically I have not handled this subject.
Okay. See, really speaking, hostile takeover, when you are actually talking about it, many companies, they actually put up a mechanism in such a way in the article of association itself, certain restrictive clauses, etc., and other thing, and not to safeguard their interest. That is one thing is there. And even if the hostile takeover place, and also they also have a formal discussion, find out what is it, etc., and all. It is actually done normally. In fact, when the company where I was working, 3 times the takeover has actually taken place. Everything has actually gone smoothly, passing on from one hand to the other hand. It's all will depends upon the company to company, what they want to do, what is the structure, what is the things, etc., and all this thing. Because there cannot be a what you call a standard format of lay down sort of a things can be given for this particular question. Actually, much will depends upon the company and the circumstances, and again depending upon what are the articles contains its clauses, and all those things will depend upon. Yeah. Yes, Aflia, go ahead.
For listed entities, the takeover regulations are in place.
I think before we move ahead, there is one more question with regard to SRC, that how is the reporting done by SRC to the board quarterly? So basically, there need not have to be a separate reporting as such as far as SRC is concerned. So there are the secretarial standard provisions which says that the meetings of the every committee will have to be placed in the board meeting. So whenever we are having the meetings of SRC, in the subsequent board meeting or the immediate board meeting after that particular SRC, we place the minutes or the meeting agendas in the board meeting. So through that reporting, we inform it to the board that what was the deliberation which happened in the SRC.
Yeah, you are absolutely right, actually, because SRC normally deals with it. It is all minuted. And
Correct.
in fact, in the next board meeting, one of the things in the board item is actually the taking note of the minutes of the various committees, which is one of the item which is
Committee
actually
meetings.
there. In that particular time, if any specific thing has to be brought over, etc., and all those things, it is generally done. Yeah,
Those are addressed by the chairman of the SRC, which also a member of the board of directors.
correct. Yeah.
So we move on to another important committee, which is Nomination and Remuneration Committee. Under the Companies Act, Section 178 is the relevant section which provides for the applicability of NRC. So as per Rule 6 of the Companies Meeting of Board and its Power Rule 2014, every company which is covered under Rule 4 is required to mandatory uh, establish an NRC. So the companies are every listed company, every public company having a paid-up capital of more than 10 crores or a turnover of exceeding 100 crores. Further, every company having outstanding loans or debentures or deposits exceeding 50 crores is also required to establish NRC. The composition for NRC is minimum of 3 non-executive directors, out of which at least half shall be independent. The chairperson must be an independent director. The chairperson of the company may be a member of the committee, but he cannot be the chairperson of this committee.
There is one more question, that whether SRC is required to be held in every quarter. So I think Alifia has covered this point as one of the slide. So as per the regulation 20 of SEBI LODR regulation, SRC need not have to be held in every quarter. The frequency should only that there should be at least one SRC meeting in every year.
But one thing is there in practice, I handle the listed companies, etc. By and large, the meeting is held every quarter because mainly the limited review report one has to actually come out.
It's a good practice to have it.
What are the complaints in the beginning of the quarter? What is the complaint received in the quarter? What is pending in the
Correct.
quarter? What is the status? That report forms part of it in every quarter in the listed company. So in the
Correct.
light of that, it is a good practice to have this SRC committee so that complaints are analyzed on the ongoing basis instead of accumulating the things and see what happened, what has gone wrong, etc. And again, as Aphilia puts it in the slide very clearly, it is one of the duty of the SRC committee is expeditiously redress the complaints from periodically. That is required. From that point of view, it is better to have a periodical meeting, although law does not mandate that. In practice, that is the thing, that is what we have been actually doing it. What about Swapnita, on your thoughts on that?
I absolutely agree with you, because as far as the shareholders are concerned, they have got this good platform through SRC, and even SRC members are aware on a regular basis that what is the status of those complaints, those grievances which are directly connected with the investor. So I absolutely agree with you, sir, that as a good corporate governance practice, we should have this SRC meeting on quarterly basis.
To be very frank with you, I've been working with the 1956 Act,
Okay.
not with the 2013 Act. In 1956 Act, when we are there, we have actually established in our company, even those days, I'm talking about the year 2006 and 2007, much before the regulation has come, we have actually established what you call a policy for dissemination of the information to the marketplace, which is not mandated by any law. And second thing is we have established the CSR policy. We have established the whistleblower policy vigil mechanism. And not only that, in our annual balance sheet report, we used to publish the report of the various committees. The job done by the audit committee throughout the year, job done by the NRC committee throughout the year, job done by the Stakeholder Relationship Committee throughout the year, job done by the Risk Management Committee. In the report of the committee duly signed by the chair of the respective committee, we used to actually publish. To that extent, we have gone to the disclosure even those days. When you talked about the good practices, I just thought of sharing with you.
So reporting is a very important part of this entire CS profile.
Yeah, that is right.
You have covered that point very nicely.
I think your voice is breaking to some extent. Yeah.
Alifia, I think I have done.
Yeah. Really speaking, yes, disclosure is really required because, it is not only that justice seems to have done, justice really done, that has to be brought to the notice. So naturally, that is required. Yeah.
Okay. So we move forward with the function which NRC the Companies Act. It provides for identification and recommendation of individuals who are appointed as the directors, KMPs, and senior management personnel in a company. It also recommends their removal from the board of the company. Further, it evaluates the performance of the board. It specifies the manner and criteria for evaluation of the performance of the board of directors, individual directors, and the committee. It is also responsible for maintaining diversity in the board and also succession planning. It formulates a remuneration policy which depends on the criteria such as qualifications possessed by the individual, their attributes, the independence of the director. Further, the policy also ensures the relationship between the remuneration and the performance and the balance between fixed and incentive pay. So here, by formulating this remuneration policy, NRC plays an important role in maintaining or in retaining the top individuals in a company. Further, Section 170, it also provides that the NRC policy is to be included in the board report and shall also be made available on the website of the company. Further, a statement indicating the manner of formal annual evaluation by the board is also required to be disclosed by a company. We move on to Regulation 19 of SEBI LODR regulation, which provides for applicability and formation of NRC to listed entities. So NRC is required to be constituted by all listed entities, be it equity, debt, or issuing convertible securities. The composition is minimum of 3 directors, and all the directors must be non-executive directors. At least 2/3 of the directors of this committee shall be independent directors, and the chairperson of the committee also needs to be an independent director. Regulation 19 mandates that NRC must meet at least once a year, and the quorum of such a meeting shall be 2 members or 1/3 of the members, whichever is higher, including at least one independent director to be in attendance in all the meetings. The details of the roles and responsibilities to be performed by the NRC has been provided under Part D of Schedule 2 of SEBI LODR regulation. It provides that the director and KMP appointment and removal. So every NRC recommends the appointment or removal of a director or KMP to the board, and the framework is also being recommended to the board. It also devises criteria for qualifications, positive attributes, and independence of a director. The remuneration policy drafted by the NRC recommends the criteria for the directors, KMPs, and senior management personnel.
When you talk about the frequency of the NRC meeting, here again, although the law says at least once in a year, what my experience, even experience with some of my colleagues is It is not once in a year actually. Normally, practically, I'm talking, they meet more than that. What they do, in the beginning of the year, NRC committee meets and they actually set down the various target and goals which are to be achieved by the senior management, etc., and all this thing in terms of key performance area and indicating the key performance indicator, etc. That is one thing which is actually done. Basically, nowadays, the companies actually moved making the remuneration package in such a way, everything is based on the performance based review. That is the way it is moving. So they set up the performance standard in the beginning of the year, during which time the NRC meets actually brings out the documents which is actually circulated to the people. And second thing is, in between, the NRC committee also meets that in monitoring the thing, how it is happening, what is the any changes required, anything, etc. and all this, they also meet. And again, the end of the year, they actually meet in terms of finalization, vis-a-vis performance, analysis, achievement, etc. That is what it normally happens in many of the organizations. Swapnika, what is your experience?
Sir, actually, when we were discussing yesterday, also, I just told you that we have a very limited role of a nomination and remuneration committee in our company. Being a public sector company, we have to abide by the policies of our ministry, that is Ministry of Port, Shipping and Waterways. So NRC as such don't have that role of evaluation of the qualification of any director or who will be the chairman. All these decisions, we just have to follow the directions of the ministry. So in our case, the role of the NRC is basically restricted to the board evaluation policy making or the board evaluation procedure or the performance related pay of the senior management. So only this much role has been confined for the NRC, being a public sector company.
100% I'm in agreement with you. I told you also in the beginning, because the PSU, they got too many things, their own guidelines,
Correct,
that
sir.
is definitely there. But only thing is coming to the meeting frequency, whether it happens only once or it is happening more. That is their point.
No, it is happening at least twice or thrice in a year. That is the frequency in our case.
Okay. And somebody has actually put here, can the quarterly review reports be adopted without the reports of the various committees? Here, the question is not the various committee reports or something like that. Basically, what happens is the quarterly review report is financial reports, which is done with the limited review, but added to that, the complaint status, which is actually added here, which is required to be given, one of the mandatory requirements for the listed company, that is one of them. So there is no necessary for the other committees to give the report for this particular purpose, so long as it is monitored. The whole idea, what we talked about, the frequency of the meeting of the Stakeholder Relation Committee is from the limited point of monitoring the complaints from quarterly basis and providing the inputs to the thing. That is what we are talking about it here. It is not based on anything, because when you talk about the limited review report, the financial report, basically it is the audit committee, which actually goes through the things, etc. So audit committee normally recommends to the board. That is how it comes. As per the complaints is actually concerned, it passes through the Stakeholder Relationship Committee. That is the thing. Yeah. Yes, Aflia, go ahead.
Another important role which an NRC plays is regarding the extension or continuation of the term of an independent director. So it deliberates upon the performance and evaluation of independent directors and accordingly recommends to the board regarding the reappointment of a particular independent director. It also recommends to the board all remuneration in whatever form payable to senior management. So bringing the senior management under the purview of the NRC is also an important aspect, since it has increased the responsibility of NRC apart from evaluating the directors and KMPs for a company. Further, for every appointment of an independent director, the NRC shall evaluate and balance the skills, knowledge, and experience on the board. On the basis of such evaluation, it needs to prepare a description of the role and capabilities required of an independent director. In this way, it is in a better position to recommend to the board the appointment of a particular person as an independent director after identifying their capabilities. For identifying the suitable candidates, the committee may use the services of an external agency. It may consider candidates from a wide range of backgrounds, having due regards to the diversity maintained in the board, and also consider the time commitments of the candidates. So these are some of the important parameters which a committee needs to look into before identifying a candidate as a potential director. Performance evaluation is an important function which NRC performs. So it evaluates the performance of independent directors, the board as a whole, and each of the committees of the board. It also formulates a succession plan for directors and senior management of the company so that the functioning of the company is not affected. It also ensures an appropriate mix of knowledge, experience, and diversity on the board of the company.
Priya, one question I have actually, when you talk about the evaluation performance, okay, independent director, understood, board as a whole, committee of the board. In fact, don't you think the same directors are again evaluated in the board as well as the committee? To some extent, there is a duplication of the evaluation taking place in the board as well as committee because the people are being the same.
Sir, though the people be the same, but their performance in each of the committee, the role which they play. For NRC, they have a different role to play. For the board, they have the company as a whole they would be looking into. But when they are members of a particular committee, they need to perform the function depending on the terms of reference of that committee. So for each committee and the board, a director plays a particular role, a specific criteria is being set for that.
Okay. How it happens in government enterprises, Supanita? Board committee evaluations?
Sir, there are the different practices which are being followed in different organizations. Like some of the public sector companies.
I think some problem. We lost her.
Yes.
Yeah. Okay, you proceed, Priya. Let her resume, then we'll talk to her. Yeah.
So the disclosure requirements, the composition of NRC is required to be disclosed in the annual report and the corporate governance report by a company. Further, the remuneration policy is also required to be uploaded on the website of the company, and a link for the same is required to be given in the annual report.
I think Swapnita is back. Yes, Swapnita, you are saying something.
Yes, sir. So I was telling that there are the different practices which are being followed in different public sector companies because the SEBI LODR doesn't give an explicit exemption for a government companies to follow this board evaluation policy. However, this exemption has been given under the Companies Act to a public sector company. So some of the companies are of the view that even if the SEBI LODR is not giving us this exemption, so we'll follow this process. However, I know few companies who says that if the companies that is giving us this exemption and the entire process is beyond the purview of the company, then we'll not follow this process. So as far as Shipping Corporation of India Limited is concerned, we are following this board evaluation policy. And I agree with Alifia what she said earlier, like a board member can perform his duty in a separate capacity as a board member and in an audit committee. For example, a chartered accountant can be a good member in a finance committee meeting. But as far as the shipping line is concerned, the shipping operations are concerned, his contribution can be limited. So when you are evaluating him as a audit committee or as a finance committee member, you can evaluate his performance differently than his performance or than his deliverables in board committees. So I agree with Alifia to this extent, sir.
Thank you. Yeah, go ahead, Aflia. You're on mute. Aflia, you're on mute.
So here we have reproduced an ideal structure for a remuneration policy. So a remuneration policy needs to have an introduction, the objective of the policy, the scope and applicability, the remuneration philosophy, which is specific for each of the company, the guiding principles on the basis of which the entire remuneration for KMPs, directors, and SMPs will be decided, the criteria for appointment. Further, the remuneration to executive directors may consist of fixed, variable, or stock options. To non-executive directors, it may be in the form of sitting fees or commission. It also decides the remuneration structure of the KMPs and senior management. Further, performance evaluation linkage is also specified and the criteria are laid down by the NRC, the review mechanism, and the disclosure norms. So all this being a part of remuneration policy makes the work of NRC comparatively easier so that a proper framework is followed each year or at the time of each appointment. So here we have presented a comparative chart about NRC under Companies Act vis-a-vis SEBI LODR regulation. So Section 178 and Rule 6 governs the formation and the roles of the NRC under Companies Act, whereas Regulation 19 and Schedule 2 Part D of SEBI LODR regulation governs NRC. For this applicability under the Companies Act, it is applicable to all listed entities and public companies having paid up capital exceeding 10 crores or turnover exceeding 100 crores. Further, debt of all companies, if it is exceeds 50 crores, then NRC is required to be constituted. Under LODR regulations, NRC composition is applicable to all listed entities. The minimum number of members prescribed under Companies Act are 3 non-executive directors, whereas in LODR also it is 3 non-executive directors. In majority of members have to be independent under the Companies Act, and as per LODR, 2/3 of the members need to be independent directors. The chairperson of the NRC under Companies Act needs to be an independent director, and the chairperson of the board can be a member, but not the chairperson of the NRC. LODR also provides the same. There is no specific frequency for holding NRC committee meetings have been prescribed under the Companies Act, whereas under LODR, it is required to meet at least once a year. But we have already deliberated the important role which NRC plays, and it is not possible for it to meet just once a year. There may be multiple meetings which an NRC may be required to hold for the purpose of identification of directors or SMPs or KMPs. The quorum for NRC meetings has not been specified under Companies Act, whereas under LODR, either 2 members or 1/3 of the total members, whichever is greater, with at least 1 independent director present, shall be the quorum. The functions or duties of an NRC have been provided as it needs to recommend the appointment or removal of directors, KMPs, it needs to evaluate, and it needs to formulate a remuneration policy. Under LODR, the appointment and removal of directors, KMPs, and SMPs, the evaluation of the performance of the board and its committees. It needs to formulate remuneration policy. It also needs to have succession planning in place for the company, and it needs to ensure that the diversity in the board is being maintained. Further, remuneration policy is required to be mandatorily disclosed annually. It needs to be uploaded on the website, and the link for the same needs to be disclosed in the annual report of the company. So here we are discussing in detail the circumstances where the NRC approval is required. So whenever a director, KMP or senior management is being appointed by a company, NRC of that company needs to evaluate the candidate and accordingly recommend to the board for their appointment. So directors may be any executive, non-executive, or independent. KMPs may constitute MD or CEO, CFO, CS, or a whole-time director. Further, senior management may be the departmental head, etc. So all these requires the recommendation of the NRC to the board for their appointment. Further, NRC also shall recommend the removal of directors or senior management if they are deemed to be unfit due to non-performance or legal regulatory violations or breach of code of conduct of the company. As we have already discussed, an important function of NRC is to formulate a remuneration policy. So accordingly, it needs to formulate a remuneration policy and send it to the board for its approval. Such policy may consist of directors' remuneration, fixed or variable pay structure, performance incentives, ESOP or stock-based incentives, and policies of remuneration for KMPs and senior management as well. NRC also plays a vital role in assessing the independence of a proposed director on the board of the company. And after assessing this, it shall recommend his appointment to the board.
Somebody has put up a question here, whether the chief financial officer appointment recommendation is also required by the audit committee.
Yes, sir. It has been covered under the Schedule 3 of SEBI LODR regulations. So the appointment has to go through the audit committee. It comes under the specific role which has been specified under SEBI LODR regulation of the audit committee.
Absolutely, I agree. Absolutely, I agree with you. Because this is being a financial related function, it has to go through. You are right.
Yes.
Yeah.
So in that way, the first role the NRC will play to identify a suitable candidate for the role of a CFO, and then it may recommend both to the audit committee and board for his appointment.
Yeah, that's right. That is the way. Because we also done that in the past actually. Normally what happens, NRC identify the suitability and other things and all these things. After that, it is going to the audit committee. Audit committee specifically sees the requirement in terms of the financial and other things and all these things. Then the recommendation go to the board and the appointment is actually done. Yeah. Yes, please go ahead.
So NRC is also responsible for specifying criteria and overseeing the performance evaluation of each director, board, and committees of the board. So it accordingly.
One more question has come. Any candidate appointed of the internal auditor need to get approval of the audit committee or NRC committee? According to me, NRC committee will not be involved in case of the internal auditor. Internal auditor is the purview function of the audit committee. So naturally, the internal auditor will actually go through the audit committee, not with the NRC committee. Yeah. Yes, please go ahead.
The reappointment of the directors on the basis of evaluation and their eligibility is also one of the important functions which an NRC does. So accordingly, after assessing all the criteria, it recommends the reappointment of a particular director to the board of the company. It also formulates a succession plan for board level leadership and key executives and senior management personnel of a company. NRC also performs an important function where the approval of the NRC is must for recommending the schemes of employee stock options and stock appreciation rights. It also needs performance-linked bonuses and equity or cash to the board of the company. Another important is fixing or revising any managerial remuneration. So the approval of the NRC is required to be taken whenever any managerial remuneration is being fixed or revised basis the remuneration policy which has been approved. Approval is also necessary when remuneration exceeds the limits that have been prescribed under Section 197 of the Companies Act. So accordingly, the NRC approval recommendation, then the board approval and shareholders approval will be needed whenever the remuneration exceeds the limit. where it has been specified in the NRC policy, it needs to review the casual vacancies that may occur in the board during the financial year, and also recommend the appointment of interim directors or interim KMPs on the board of the company. NRC also determines whether an appointee meets fixed and proper criteria as may be prescribed by the RBI or SEBI guidelines, especially in cases of regulated entities. So thus we end the NRC discussion on NRC over here. And in a gist, we can say that NRC plays a very important role in the managing the director appointment and their remuneration, etc. in a company. We move forward to another important committee which companies need to establish. It's the risk management committee.
Somebody put up a question here. Kindly check as per the latest LODR, senior management personnel appointment do not require NRC, only the board approval. Anything on this?
We'll check.
Yeah.
So we move with Companies Act. So Companies Act does not specifically require the constitution of risk management committee except for listed companies or companies with specific risks. However, certain indirect provisions require the company to have a risk management framework. Specifically, Section 134(3) and provides that a board of directors shall include a statement in the board report regarding the development and implementation of a risk management policy, identification of risks which may threaten the existence of the company, and mitigation measures undertaken. So all these requirements are applicable to all the companies, but are more relevant to companies which have significant exposure to this.
Affilia, I would like to answer this question actually. Kindly check as per the latest LODR, SRB appointment do not need NRC, only board approval. That is what he has put. If I go by the literally, what he says is correct, but the thing is, he is talking about the approval. Approval is always given by the board, not by the NRC. NRC is actually only the recommending authority. Because normally what happens is, it is actually senior management position is being a very important position. What happens is it actually goes through the suitability and other things, and otherwise that means, as you rightly put in your slide, identifying the right person and identifying the skill matrix, etc. and other thing and all, which is actually done. And ultimately, even the industry vis-a-vis is recommendations of the remuneration is also made, and the recommendation actually goes to the board. Okay, NRC is not appointing. NRC is only a recommending body. NRC is only making a recommendation in terms of suitability and also the proposed remuneration recommended. Then ultimately, board only approves it. So that is what it is.
Second side also, I also have a different view on this, what the
Yeah.
question he has posed to.
Yeah.
Basically, Regulation 16 of SEBI LODR regulation deals with this definition of senior management. And this definition of senior management includes the officers who are members of the core management team, excluding the board of directors, but includes all members which are below one level, the board of directors. So it indirectly includes CEO, CS, CFO, and what we have seen that under the SEBI LODR regulation, the appointment of CS, CFO requires the recommendation of the NRC. So indirectly, the senior management being a key position in any company requires the recommendation of NRC. And as you said very rightly, the approval would be given by the board of directors. So NRC have only a recommendatory powers in that case.
Correct. In fact, the company where I was also associated, which was one of the NSE, BSE listed company, we always had this committee. It is not today we are talking NRC and other things and all. In fact, this company was a very old company. where they have instituted right from 50 years back a compensation committee, which was subsequently renamed as the Remuneration Committee, the later on Nomination and Remuneration Committee. But suppose that this company had a policy. They identified the three levels of the management: lower level, middle level, senior level. Then above that, board levels. So what they have done is the board level and as well as the senior level, all the appointments will actually go through this particular committee, NRC committee. They will make the recommendation. Based on their recommendations, then only this will come. And even normally a senior person who is working in an organization is promoted from middle level to the senior management level. The management thinks he is suitable to be promoted. Then also what happened in the company where I was working, he is required to be presented himself with his NRC committee. The committee will actually go through and examine. They will make the recommendations. That sort of the things were there. In fact, there have been cases in our organization. I think I spent almost 25, 30 years in that organization. Many appointment has been actually through. In two of the cases, NRC has actually opinioned that you can give the salary to him, whatever you are talking about, by virtue of his experience and other thing and all, but he is not suitable to be appointed as a senior management level. It has actually turned out in two cases actually, which of course the board has accepted. He has been given the remuneration increase, etc., but he has not been given the position. That also has happened actually. So it's all depends upon the companies, really speaking, because when you say senior management, as you rightly say, law mandated these are the senior management positions, but the company can have its own senior management position which the company feels it should go through. They can have their policy actually accordingly. Yeah.
So we move forward as already discussed about the risk management committee. So it is not mandatory required to be constituted under the Companies Act. However, disclosures regarding the risk management by a company is required to be reported in the annual report or in the board of directors report under section 134 of the Companies Act. However,
here again, somebody puts it here. KMP and SMB are different. CS, CFO or KMP, hence NRC recommendation required for other SMP as per the LODR. See, here again, much will depends upon the company what they want to do it. Because these are all the mandatory position which is definitely required, because LODR or Companies Act, whatever it is, it talks about all the senior management positions such as this, KMPs, directors, etc. necessarily has to go through the things. Then when you come to the senior management position, maybe other than that, okay, if the company feels that policy, that is a different thing, but normally, which is not the case, practically this is what it is seen actually. I agree, KMP and SLB are definitely different, because every SLB is not the KMP, but the KMP is necessarily an SLB. That is there. Yeah.
So though the constitution of RNC is not mandatory under the Companies Act, the audit committee has the role to evaluate the company's internal financial controls and risk management systems. And an audit committee also needs to ensure that there are adequate safeguards to identify, mitigate, and monitor the risks that may be faced by a company. Regulation 21 of SEBI LODR regulation mandates the constitution of risk management committee for the top 1,000 listed entities and a high value debt listed entities. Further, it also mentions about the composition of such a committee, which shall be at least 3 members. A majority of the members shall be from the board of directors, and at least 1 member should be an independent director. The chairperson of RMC shall be a member of the board. Minimum 2 meetings have to be held in a financial year, and the gap between 2 meetings should not exceed 210 days. The quorum for the meeting of such a committee are 2 members or 1/3 of the members, whichever is higher, and at least 1 board member shall be present in all the meetings of the RMC. Part C of Schedule 2 of SEBI LODR regulation provides for the role to be performed by a risk management committee. So, RMC needs to formulate a detailed risk management policy which shall include a framework for identification of the risk which may be either internal or external, faced by a listed entity, in particular relating to financial, operational, sectoral, sustainability, information or cybersecurity risk, or any other risk as may be determined by the committee. It shall also mention about the measures for mitigating such risks, including keeping in place the systems and processes for internal control of identified risks. It also needs to formulate a business continuity plan for the company. RMC needs to ensure that an appropriate methodology, process, and systems are in place which shall evaluate and monitor the risks that are associated with the business of the company. In this way, it may assist the company, the board of directors, to evaluate the potential risks and accordingly develop systems internally. It shall also monitor and oversee implementation of risk management policy, including evaluating adequacy of risk management systems. Again, this is a very important role which is to be performed by an RMC. Yeah. Even after formulation of risk management policy, it needs to check whether the implementation of such a policy is being done by the company and accordingly adequate systems are in place. It shall also periodically review the risk management policy at least once in 2 years, including considering the changing industry dynamics and evolving complexity. So there may be a framework to evaluate such a policy every 6 months or a year, depending on the industry in which the company functions. It shall keep the board of directors informed about the nature and content of its discussions, recommendations, and the actions that are taken. The appointment, removal, and terms of remuneration of chief risk officer, if any, shall be subject to the review by the risk management committee. The risk management committee shall coordinate its activities with other committees in instances where there is any overlap with activities of such committees as per the framework laid down by the board of directors. So in cases where a financial risk is being faced by a committee, by the company, then it may coordinate with audit committee to mitigate such risk. The disclosures, so the composition and the meetings of the RMC are required to be disclosed by a company in its annual report, including the number of meetings and attendance of the members. And the policy also needs to be disclosed by the company on its website under Regulation 46. So some of the key areas that are covered by the RMC in practice are given here. So the type of risk may be a strategic risk, for example, market competition or regulatory changes. The financial risk may pertain to liquidity, forex volatility, interest rate risk. Operational risk may pertain to supply chain disruption or any production issues that may be faced by the company. Cyber security risk, data breaches, ransomware, phishing attacks. So these are some of the risks. Cyber security risk plays an important role now. So a company needs to have a proper IT system in place to face against any potential data breaches. ESG risk may relate to environmental compliance, employee safety, stakeholder mismanagement. Reputational risk may include negative PR or social media backlash. So even all these types of risks have to be covered by the RNC in practice. So that's, thank you.
I think in chat box, there are no more questions. Whatever the questions have come, we already addressed. Now we can ask the participants if they want to ask any question, they can raise their hands. We can permit them to speak and we can address this question. Anybody would like to ask any question, please raise their hand, please. I don't see as such anybody has risen the hand. Apriya, you can actually stop sharing the presentation. Yeah. Any participants would like to ask any questions, etc., please raise your hand, please. Somebody actually put up here, please send the PPT. I would like to inform you, PPT is not generally shared. What we do is we actually have the recorded version of the webinar, which is actually disseminated via YouTube. You can actually access the YouTube and you can actually see which contains the presentation. PPT is not generally not shared. The dissemination of the webinar will be available in another 2-3 days time when it is done with. Yeah. I don't think anybody has risen the question. That means there is no questions which are there actually. So I'll ask Swapanita to share her final thoughts on this, on the subject, especially when come to the public sector undertaking vis-a-vis other sector undertaking. I know she's walking a very, very tight rope in her role, actually functioning the things. Because I've seen many companies who had a varied experience. In fact, yesterday also I was talking to her when we had a meeting. I actually call the people who are working in the public sector undertaking company secretary. They are like that of the Draupadi who has got 5 people to respond. Here it is not 5 people, it is more than 5 people actually. In fact, she will share the experience when the parliament is in session, especially when she is being in a Navaratna companies, the tremendous amount of the information which is preparation and sending questions, etc., other things and all, a lot of job which is actually involved here. Because they have to work actually, expect the unexpected things. That is the way they have to work with it. Over to Swapnita, please.
Sir, I completely agree with you, but I think it's not only a company secretary of a public sector company which role has been widened, but if you have seen the recent amendments of SEBI LODR regulation, you must have come across this recent amendment where SEBI itself is imposing that a compliance officer has to be an officer one level below the board of directors. So that recent amendment, it's
I think seems to be some network issue.
Sir, you may give your thoughts on the topic.
Yeah, really speaking, as she started saying it, the company secretary's position today has undergone a very, very sea change. Because when you actually talk about company secretary in the employment, his level is raised one below the board level. It has been always there because he is directly reporting to the board. Yeah, she is back. Yes, Soprika.
yeah, sir, I think you people lost me.
Yeah.
So I was telling it's not only a company secretary of a public sector company, sir, but through this recent amendment of SEBI LODR in this Regulation 6, where they have stated that the compliance officer has to be an officer one level below the board of director itself has given, has loudly stated the importance of this entire profession in any listed company, or rather in any company, whether it's listed, private, or a public company. I think nowadays this role has widened so much. There are so many penalties under the Companies Act. ROC is imposing penalty. Then there are SEBI LODR regulation, then ICDR regulation. So this role has actually gone beyond this regulatory aspect. Other than this, there is a reporting to the board of directors, this board level committees. So I think it's giving a good opportunities also to our budding profession, like they can contribute to this corporate level world or to the compliance world. So I think, of course, not only a company secretary of a public sector company, but overall the scope of this profession has been increased very widely by this recent amendment of SEBI LODR.
To add to you, nowadays increasingly the regulator also recognizing the role played by the company secretary in various judgments which has actually come either in the ROC order or in the SAT orders, etc. and all these things, they are actually emphasizing what is the duty of the company secretary. In fact, one of the recent SAT order I have seen, the company secretary is actually failed to close a trading window at a particular time. UPSC was actually in place because one of the parent company was taking over the subsidiary company of the other company. This information was actually known, but he has not closed the trading window. They told it is the responsibility of the company secretary to close the trading window. He has been actually penalized to the tune of 2 lakh rupees on this. That is one thing. And second case I came across, he is supposed to monitor the trading of the designated people actually, where he has actually failed to it. There has also SEBI has taken and SEBI has initially levied the penalty and against that has actually confirmed that sort of the judgment I actually see it. And not only that, increasingly what has happened when somebody asked questions, when a company secretary is signing the balance sheet, etc. and other things and all, what happened, what is the responsibility and all those things, questions raised actually many times. But now, in one of the case I saw, what has happened, the secretarial auditor, he has not commented anything on the related party transaction issue is there, where something is actually missed out. The so-called notice was issued by the ROC to the secretary. And he told very categorically, I referred the audit report, statutory audit report. I relied upon the report. There is nothing in there. That is why I not report. But this is the very speaking order ROC has issued very clearly saying that, no, sorry, you can refer the statutory audited report, but your duty is to form an independent opinion based on the evidence verifications. And you have failed to do that. What they have done, they have gone to such an extent, they have quoted actually the guidance note issued by the Institute of Company Secretaries of India on related party transaction. Verbatim, they have produced what the company secretary is supposed to do on what matters, and where the company secretary is actually failed to do this, etc. They have emphasized upon the company secretary is supposed to check and form an independent opinion and include secretarial report. He has failed to do that. I think an amount of around 2 lakh rupees has been laid down. It is actually in the listed company, 2 of the listed company. It has happened. I can tell you also, it is one is actually in SR shipping and another thing is actually Sun Pharmaceutical. These are the 2 companies the judgment has come. That is the thing. And again, one more judgment I came across with ROC. They said actually, when the company secretary is appointed, the board of directors presumes it is the responsibility of the company secretary to ensure the compliances. He has to ensure they are relieved from the compliances. They are actually concentrating on the businesses. Company secretary has to ensure these compliances totally. So any non-compliances matter relating to this action can only be taken against the company secretary and company secretary alone. That sort of the judgment also has come. One side, we are talking, our recognition is getting recognized day by day more, but at the same time, I have to tell that we have to rise our bar. We have to go beyond putting the compliances in place, educating the people, bringing the awareness to the board members, bringing the awareness across the organizations, telling them what is compliance, what is the important, what are the role they have to play. All the things the company secretary has got a greater role to play actually. Let it be a private sector or public sector or even the government sector with whatever the restrictions are available. The role is to be made known to the people. Awareness has to be brought about the compliances. That is what it is happening. Nowadays, these non-compliances are looked very, very seriously by the regulators. That is what I would like to say that. Yeah.
And they are very prompt when they come to levying these penalties. Like even if we are doing any non-compliance, I see that within next 7 or 10 days, we are receiving the penalty notices from the stock exchanges. So they are so prompt. So like they're so vigilant, we should say, rather than prompt.
Correct. Absolutely, you're right, actually. I think there is some more things have come. One level below means what if we have the ton level below the board? Ton being the highest, compliance officer should be at level ton. Reporting structure of no relevance in considering the level of organization structure. Please confirm on this. I think probably if I understand the question, companies normally work what you call organization structure. In the organization structure, you actually show with the board of directors and the managing director to who are all reporting. That is what you are talking about it, and you have that.
I think
But
this
here,
gentleman is referring to the recent amendment in the definition of the compliance officer. Because
correct.
as far as I know, there is so much debate which is happening amongst the CS fraternity while interpreting this particular regulation. But SEBI has also issued a recent clarification, two clarifications which they have issued, that whether the reporting structure and the organizational hierarchy should be treated differently when construing this entire provision. So I think this person is referring to that.
Absolutely right. You see, organization structure is something different for the parts of employment, opportunity, remuneration, etc. But the reporting structure is different. What is SEBI LODR is talking is company secretary is directly responsible to the board. Board means probably the topmost person, the managing director of the company. If something is not there, directly to the board committee chairman, or in cases related to audit committee chairman. So we should not get confused the organization structure versus reporting structure. What LOD are talking about actually a reporting structure, you should be in a position to directly report to these people. That is what they are actually emphasizing upon it. That we have to understand very categorically. Because in many companies, in the company secretary's position, when they talk about it, they have something different, manager, deputy manager, assistant manager, etc. and all this thing. You are placed in what grade? That is nothing to do with this. That we should not get actually confused. Because placing you in a particular grade for the purpose of fixing your remuneration, etc. and other thing and all, something different there. But the thing is, reporting, when it comes, LOD are talking about the reporting directly to whom. That is what they are actually
Their
talking about
intention
it.
is very clear, sir, that the person, the company secretary or a compliance officer should have a direct access to the MD or to the board. And there
Correct,
should not be
absolutely
many
correct.
layers or obstacles
Correct.
while reporting.
Absolutely correct. That is what it is expected in these regulations.
Correct.
Yeah. As you rightly say, yes, still there are a lot of debates which are actually there. I am also hearing this. But the thing is, yes, we should not get confused with the organization structure with the reporting structure. Yeah. Any more questions from the participant, please? If no more questions are there, I think we can close the session. I would like to take the opportunity so much to Swapnika, who came with the versatile experience, who's having initially a financial and later on switch to CC. Both the versions she knows very categorically. Especially, it is very credible for me to know she is working one of the Navaratna companies and she's having a very tight rope in her young age. It is a very good experience for her. Not only that, she also handled a demerger related issue in their organization, which is a great experience. How many company secretaries do get this sort of the opportunity? Every company secretary want to have their experience, but the thing is, do they get it? That is a real question there. To that extent, you are really lucky to have that. I must say that your contribution was really good. You shared a lot of good things. You actually shared the latest things, etc. It is very good. And coming to Aflia, excellent presentation, Aflia. You actually capsuled everything in the gist of it and brought the things and very nicely in the lucid language. You actually brought it to the audience. Today learning was really good, actually speaking. I must really appreciate for your very nice and good presentation. With this, we close the session. Thanks a lot. Yet another session we'll meet in the next week. Thank you. Have a very good day.